Hello and welcome, as today is Wednesday, the 11th day of April 2018. My name is Derek. Everything you do is your own risk, own reward regarding any financial investing decisions you happen to take. Let's mainly focus on the gold charts, but we'll start off with the dollar index and take a look quickly at silver and the gold to silver ratio at the end, but primarily focusing on the gold charts. On the daily term time frame for the dollar index, the price action starting the year just pretty much going down after the recent top in November, but over the last few months has had several resistance hits at around 90 and change up to almost 91, but mainly at around 90 and a half. The price action has the leaving of on the 5th of April, the green candle up gets above the 18 average, making a statement that it wanted to break out above the upper level of resistance, especially after having about 5 days or so hugging the 18 average of highs like it did. And now all of a sudden, red candle down after that day. That's an alert sign right there. And to follow it up with the 3 red downs, now leaving the 18 average of lows. Okay, well, maybe it's going to stay in the range and test the lower end of the support mark. Taking a look at this on the weekly chart, there's your situation of having a leg lower, breaking down below previous support of 91. Getting down to 88 and a half, and now several weeks, 1, 2, 3, about 6 or so, such, just sticking within this declining 18 average, so leaving it seeing price action at about 88 and 2/3. Oh, we could be seeing good gold and silver prices, as this would probably be on route to a fall below here, and of course the next support level is 83. On this monthly chart, for any type of decent correctionary moves, it's going to need several months to correct through time within this move, or the 18 average of lows right now is at 92. The 18 average of highs is close to 95. As within this, if it looks good on the daily charts and all that, it's got a long ways to go basically to regain this trend, and it's got a long ways to go even to just revert this and have a decent move lower. And I have no idea if it tests these longer term support levels near 70 or breaking below 80 what would happen, but we'll see, because this is just fiat currencies versus other fiat currencies, so it's kind of interesting on that degree. So let's move over to gold. This is the daily chart, which showing a very interesting situation. But before we get into analysis within such, I want to just compare the US dollar price with the Canadian dollar one. So the exact same time frame for Canada shows a very different looking chart, not trading in as much of the same harmony. On the weekly chart in the Canadian dollar currency, we can see within this one here, because I'm going to be going over technical analysis on the US afterwards, but I'll do more Canadian analysis here. With price action having the resistance in 2015 at about 1550, finding it as support on the April of 2016 and around December of 2016, and again in July of last year. And it's been having resistance at about the 1740 mark. Now taking a look at gold on the weekly chart in the United States. It's more of a different harmony, but we're going to be going over this. This is just a powerful, powerful setup as it's playing through right now. The longer this one takes, and it's been taking a while, and the longer this keeps its uptrend, the more powerful this system or strategy setup is going to present itself. On the monthly chart, this is what gold's been doing against the US dollar. Huge move up and going sideways. Against the Canadian dollar, we only got not as much data, but relatively the same thing. But interestingly enough, the resistance level for the all-time high in the Canadian dollar was about under 1900, and it supported its move at about 1591. So it's retracing in the middle part of its leg higher. So it's doing a little bit better in that sense when you compare it to gold against the US dollar, which its support level was 1545 and its high was also 1900. So then let's now take a look at gold again on this situation here. So the rally early December, consecutive days up every single day in a row almost. We're going to have several more situations like this. This could be the start of this again, where it's on day number 4 of maybe 14, 20 amazing days where the 18 average will look something like it is. It's had major resistance from this move. First at 1366, then again at 1363, then again at 1356, and it's getting up to that point obviously again. The more often these resistance levels are tested, the more likely it is to be taken out, especially if it can hold any kind of at a resistance level, if it can hold any type of bullish moves within its short-term period, then that really increases the chances I'd be looking for it to take it out. Now within this weekly chart, this is just fantastic. Now what I'm going to do is I'm going to show the lines in here, but I want to use my drawing tool and I kind of can't unless I, well, there's an alternate tool. I'm going to bring another US gold chart up. But I will show the lines in, and so there we have it, some key levels for the gold price. And 1428 and a third is really just a match of this resistance. I'll talk about that more in a little bit. But 1600 US on any breakout is a level that I'd be looking to go towards. So I'm going to change this. It's going to be XAU USD code. Alrighty then. This is just very, very interesting. I've never really seen anything quite like this. So you have all of these resistance hits within this area. So I got 6 different circles drawn in, and I'm not going to count these highs from January of 2015 because that was well below where we're at. So it's based on where the green line is at 1350 current price action, majorly large pierce above here. When a big move happens, each move is going to usually come on lower volatility within any type of neutral correctionary phase. And when you have a spot like this with massive resistance, this obvious uptrend line, and you have this break above it, the moves can be mind-boggling when you have that occur. It almost is set up right now to have a decent size move. I suppose it could continue ranging a bit between 1200 and where it's at now, but if the pattern of the higher lows gives in, which is this low, so we have 2, so 2 higher, 3 higher, and right now this is where the last low happens to be. But within each one, when we look at these lows, this one came after a major price decline. This one came after, well, from this high, this was a price decline. This in here had this price decline after this one. But this low is mainly that of correcting through time, doing so at this level of resistance that had occurred back in about a year ago. So a lot of beautiful bullish sentiments, to say the least. And Yeah, I think it's just a matter of when. I think it's got a good chance of doing so. Again, like I mentioned within these lows, if the low of about 1258 even gets violated, then this could be in turn an interesting situation where you may see some decent sized red candles down to match these lows. Do I expect that to happen? I really don't think so. We're in an interesting time where more and more people every day are understanding what the term fiat currency really means. I grew up without even hearing that term until around 2007. And yeah, then we have a situation like Bitcoin coming in. Now everybody at least has heard of such. More and more people are hearing about what I consider to be the greatest fraud, at least in modern history. And modern history is basically anything from post-Middle Ages, so 1700-ish on. Let's bring this back to the more longer term time frame, which is in that of the monthly chart. And when this thing had its move at the start of the millennium, getting out past really around 300, it was non-stop going higher with some correctionary moves here and there. You have this little sideways one, a little bit of correctionary move here, this big one in 2008, microscopic one here, and well, this has been a more of a longer term one. But again, when we see this pattern breaking out above it, it wouldn't be a surprise to me if it took only a couple periods, 2-3 periods, which is 2-3 months, to get from 1350 to 1950. Yes, cryptos can do this in a day, which makes it very interesting, the capabilities of these markets when any type of major fundamental changes. When I say fundamental changes, I mean market trading behaviors goes through major parallel changes. Because then we're going to start talking about breaking out past this resistance field, how high this could go, how long it would take, how fast, what the corrections would be along the way. Because as I pointed out here, there was just a little bit along the way during the bull market that started this millennium. Okay, I'm going to finish this off next with the price of silver. I'm not going to go over that as much. And then the gold to silver ratio. And using the monthly chart in this example, a lot more of the swings of the higher volatility. As I pointed out within gold going from 2000, a lot different of a story on silver. As one, it was delayed in its breakout. Interesting, because right now, of course, gold is showing a lot more of a bullish setup right now than silver is today. But when it got going, breaking out of resistance around $5, it managed to make a move up to about 8.5. That's a gain of about 60+%. And this correctionary move, a decent correctionary move here, an extreme one in here. And there really wasn't much at all. Just this little small glimpse in here. Going from the breakout of about $18 up to about $50. And in 1979 and throughout the 1970s, there were some tremendous up moves. So a lot of this could be crypto-like based, going up a lot faster than it goes down. In most scenarios, of course, going down here, this went down a lot faster, but that was due to a major worldwide global financial crisis. And that's an exact reason within gold and silver why I like this, because within the economic monetary fiat models, a crisis of those types of natures is not that big of a surprise. So there's no beautiful looking, a happy V-shaped pattern. In fact, with gold, we see it's right at the upper end of its multi-year resistance. And here, you can almost still make a case for that of a symmetrical triangle. posted from Mike Maloney on his channel, the Commitment of Traders, the COT report, is stating that the market controllers, the big players, if you will, the commercials, they aren't short at all. In fact, they are expecting that this thing is going to go much higher. But as I've mentioned with gold making those big moves, and I meant going from like 16, 17, 1800 and breaking that resistance, what's silver going to probably do if it breaks resistance? Yeah, it's probably going to go higher. And if gold has that kind of move I talk about, where it goes up multiple hundreds of points in a short period of time, maybe we're looking at like, say, 20% in a week. Maybe silver only does 6% on that week or 7%, and it's going to catch up later. That wouldn't surprise me either. Let's go to the gold to silver ratio. And it, like gold, is having major resistance area tests. And within such, we have this resistance. Let me just do this first, okay? Then we have resistance again, and here we stand today. And this is happening north of the 80 number. After this resistance level, decent price move. Didn't take long to go back up. Fell pretty hard again, and even harder here, but consistently grinding its way back in here. It had a noticeable price correction, albeit short and just small, both in time and amount. And now it's been grinding its way higher. So it'd be a very, very interesting situation, hypothetically, and I don't know if it's going to happen. Okay, let me just give me a second. I'm going to remove the drawing tools and have this set up properly. And if say gold had a huge like 30-ish% move, and silver had like a 6 or 8 or 10% up move. Well, if this gains 20%, then we're talking about going maybe too close to 100. So maybe the market does something like this. And it wouldn't surprise me if it would create maybe later on in that area. But basically what I'm referring to is it'd be very interesting if the gold to silver ratio was able to create a failed breakout higher, and then what would result into a fast move in the opposite direction as well. And I'd be very, very surprised if in the next 10 to 20 years that this thing doesn't do anything but go significantly lower. I'd be very surprised if this does break this resistance field and does on a bullish level what you're supposed to do on a technical analysis level. That is, have a significant break above, maybe most likely, but you don't have to, find support within this area. And it can even do some of this in the early terms. And actually on the long term, hold this area here of about 66 to about, well, even just 85 as a level of support, and then just consistently have several days, weeks, months, and even years from 100 to even above 140. That would surprise me very, very large. But if it does, the market's always going to do what it's going to do. And when I say that, only price pays. So even though you think something's going to happen, or you're right and it's going to take a while to do so, that doesn't mean you're going to be able to sell your silver for $500 or $1,000 an ounce today, because that ain't going to happen. Alrighty then. Thank you for tuning in, and have yourself a great day. Bye-bye.